Hey guys, and welcome back to Smart Money Minds. In today's video, I'm going to be going over how parabolic stocks move and how they act. And all of them act in quite a similar pattern. So we're going to look at a few because of a lot of people were invested in GameStop or AMC or Nokia or BlackBerry or even MJ stocks like Tilray and APHA, and they ran significantly before it collapsed. And I'm just going to go over the patterns that they go through so that you could be aware and catch these patterns next time. There's so many people that were in this quote-unquote gold rush in these names, but turns out that they just basically all bought the top and are now trapped with stocks at ridiculously high prices and may likely never reach those prices again, or it could take a very long time. I mean, imagine all those people that bought GME from $100 to $500 thinking the stock will go up to $1,000. What I want to show you here is where is a good place to enter and how to spot an incoming top so you know when to sell as well. Checking out these charts, they all have a similar pattern in which the price action moves with the volume. And there's 4 stages to every one of these charts. There's the build up, the explosive move up leading to the eventual climax, the sharp downfall, and finally the new average. And let's take a look here on GME. The build-up is where the prices are slowly rising. There's not too much confidence in the stock yet, but there is some volume increase. As you see here, during this build-up, there was some slight volume increase here. And we're looking at AMC. Similar pattern was happening here. That the buildup was happening right around there with the volume buildup. Tilray, we're looking at the same thing. Nokia, same thing. APHA, we had some buildup into the zone here. To right around this zone here, that's buildup. This building up of increasing prices and volume isn't quite enough for the general public to be aware yet. And this is the best time to enter, as these provide the best risk to reward opportunities. This is when the stock is still under the radar but steadily climbing up. The second stage is where the explosive move to the climax is. This is where the hype and all the news comes in, all the money starts flowing in, especially from retail traders when they hear about it from the news or from their friends and family. So this stock is moving up, get in quick. The problem with that is this move is when the risk to reward starts to decline rapidly. When heavy volume gets involved, the stock can move very quickly, but your stops are also more and more percentages far away from where you're comfortable with. So imagine getting into any of this range here on this explosive move, and your stop could be quite far away. So if you got in here, let's see, your stop could be 10, 50, 75% away, and this volume is coming right in here. So you got to be very careful with where your stops are and how you're entering, because risk to reward is not as good at this range. So when we're looking at other charts, same thing. AMC, how are you going to stop with 50% far away? So risk to reward isn't that great, but I mean, you look at it, it's another 50% gain that you could have missed out on. Tilray, same thing, like this explosive parabolic moved all the way up. Nokia, same thing, moved to $9 from $3.83. We're looking at all these moves, they're all very similar. Then it all leads up to the climax. If you take a look at these charts, the volume climax is the day where the most trades occur. People are rapidly buying and selling, and this is where you have to be careful. This is also when common reversal candlesticks appear. So you take a look, common reversal candlestick. Look at this candle right there, that doji with the volume climax. You look at Tilray, same thing happened. Pretty much a volume climax. The next day volume was even bigger, but it was a huge red candle. We look at Nokia, same thing. Huge wick up top, big selling pressure all the way here. volume climax candle, and that's where we have it. The climax day generally signals a temporary reversal. It doesn't have to mean that it's the end though. It could continue if the candles following that show weak bear volume like this chart on Blink here. So if you take a look, we had a bit of a volume climax here. It came down, but it didn't give back too much. So it kind of hovered around this range here, even after this parabolic move. But for the parabolic stocks that we were watching, like GME and AMC, we're looking at more of a pump and dump. If and when we see a sharp decline, then we're at stage 3. That's pretty much where everyone is selling. There's heavy bear volume pushing the prices down. Right here, you look at that on GME. It could trade sideways for a little bit, if not have a significant bounce to a lower high, but it doesn't reach the same climax high price. This is where more people get caught in this bull trap because they think that they're buying the dip and it's going to break to a new all-time high. So more people add to their positions even harder on these dips. And stage 4 is when the decline occurs and the hype is gone. Nobody is talking about this name for a few days to a few weeks, and it settles into stage 4, which is the new average. Generally, the prices will still be higher than where it initially started at the build-up stage, but nowhere near the parabolic high prices. As you see in these charts, pretty much most of these prices have settled back down. I mean, obviously GME started around $17, ending up around $40, and it did have another move. But you're looking at the other stocks here, started for $2, ended up at $5. Tilray is still looking good. It's moved up, it came back down, it settled up at a much higher price than 4. But Nokia was a stock that actually settled back down to where it initially started at $383. As I mentioned, some of these will 2 times their original prices, some will 5 times, but definitely not gonna hold the 100 to 1,000% growth from its previous parabolic move. You see that this pattern repeats itself over and over again for these parabolic charts. So it's important to be aware of 2 things. So there's the hype and the climax, because it's okay to miss the buildup. You can still buy in on the hype stage, but it's not okay to miss the climax, get greedy, and because the chances are you're going to be catching a massive sell-off and be stuck holding shares that are not worth very much. In the comments below, tell me if you participated in any one of these hype stocks lately, and let me know what your experiences are with them. Are you still holding on to them? Did you sell for big profits? Or are you holding on until the end of time? So let me know. Make sure you subscribe to my channel, like this video, and we'll see you guys next time.